Okay, let's go. Thanks, Ajay, for that. We'll wait and watch for those numbers as well. Let's go across to the management at Titan now. Mr. CK Venkataraman is now with us. Sir, thank you so much for taking out time for us on the sidelines of your results. If you would start by giving us some color on how the demand has been during this festive season in Navratri. Last Navratra, what is the growth versus this Navratra? What is the expectation from the festive season ahead?
We spoke on the investor call yesterday and shared the news that there is a growth of in the high single digits for the first 10 days, year on year of the Navratri Dashara period. And we are certainly working to make that a consistent theme through the 30 days of the season and thereafter into the rest of the months, rest of the weeks in Q3. We will get a confirmation on this maybe a couple of weeks later. But we're certainly working towards that. The sentiment is certainly positive. All markets across the country have opened up, and I think the general news about the cases coming down is emboldening people to step out. And the jewelry category being a store of value category on the one hand, and our low market share on the other are helping us to do better within the company and better than competition, other jewelers as well. And Q2 was a significantly better quarter than Q1. October is proving to be better than Q2, and we are sure Q3 will be better than Q2.
How have the footfall been in the large format stores which have started? Are consumers making a comeback, especially with the onset of the festive season and now also wedding season going ahead maybe?
What has been interesting is there has been an explosion in the combined, what we would call phygital, even in a category like jewelry, which is high involvement, involving many people who together buy jewelry, high ticket and so on and so forth. But because we have a deep relationship with hundreds of thousands of customers over years, we've been able to set up video calls through which the sales staff actually end up demonstrating maybe 10 necklaces to a customer group in their home, meaning who are sitting in their home, and they shortlist one or maybe two pieces and make the final trip and conclude that in half an hour. So there is an appointment shopping that happens at the end of that video call. So they come in and therefore the crowd is managed inside the store. Therefore there is social distancing, discipline and all that inside the store. And even the contact time is reduced from maybe what is normally 3 hours to feels very safe. And through that we've been able to explore this new ways of selling. But the jewelry business is still substantially retail. So we're still getting a lot of walk-ins. Instead of 98% walk-in retail sales, it is now maybe 90%, and it could become 85%, but it is still 85%. Whereas in the other businesses, particularly watch business, the opportunity is higher for omni-channel sales, but the demand situation is more challenging because if people are sitting at home, not going to offices, there are no social functions. So the need for dressing up is low, and therefore products, shirts and shoes and bags and perfumes and watches are generally under pressure. And the teams are working to create desire even in these challenging circumstances. And then delivery is possible, but the desire has to kick in, and the demand will come only if there is desire.
All right. Okay. Hi, Mr. Venkataraman. This is Mubina as well joining into the conversation. Let's talk about the studded jewelry segment. There has been a bit of a recovery that kicked in sequentially, but of course we are much lower than what we were same time last year. But how are you seeing, studded jewelry as a segment proceed? Because that's of course a big margin contributor. Do you think the worst is behind us, or do you think a further recovery will take a little time?
Our target is to get to complete normalcy in Q4 in all respects. And given whatever improving trend quarter on quarter, we believe we can reach there, but it's still a very. We'll be in a better position to, in a way, reconfirm that a few weeks later, maybe sometime in December or something like that. But the quarter-on-quarter improvement does tell us that it is possible to reach the normalcy in Q4, which is what we are gunning for. So after Diwali gets over, we will get a much better view about this. Because the studded jewelry is also a discretionary product like an expensive watch or an expensive pair of shoes or a suit or whatever it is. And discretionary products are under pressure. Whereas gold is more a store of value product. And when people are happy, they buy jewelry. When they gold jewelry, when people are feeling a little worried, they buy gold jewelry. So it works both ways. But when people are a little worried or even don't have the occasions to wear such products, products like diamond jewelry come under pressure.
Okay. Well, and you mentioned about discretionary spending, and unfortunately, still the consumer sentiment is still a little weakish. So, you spoke about studded. What about eyewear? What about watches? What's the recovery expected over there? Watches, in particular, has been quite weak.
About 75 to 80% in these two, watches and eyewear. That's what we are working towards for Q3.
Well, so let's just talk about the shift that we've always been talking about. The shift from unorganized local jewelers have been under pressure due to COVID. What is the market share gain that you anticipate or that has happened because of this?
We think so. Our understanding is that while the recovery of Tanishq was in the 95+%, the rest of the industry was certainly lower. Some of the better, bigger national jewelers were perhaps in the 80s, and the regional, local, were perhaps in the 70s. That's the sense we have from our on-ground assessment, which we keep doing every month. So if you put all that together, then certainly there has been a market share gain for Tanishq.
Thank you so much, sir, for taking out time for us. Always good to get perspective. On that note, we're taking a break. Coming back quickly.